Alright, quick update on Chainlink. So there's a lot of things to go through in this video. I want to be talking about the market structure. I want to talk about a couple of TA patterns I noticed, and then we're going to be moving over into the oscillators and some of the momentum indicators. So right off the bat, the first thing that I would talk about would be this massive bear flag breakdown. And you can draw this a few different ways. You can even draw the pole up to here. The only reason why it doesn't matter is because if we do extrapolate the price target of this, no matter which one you're drawing it from, it is going to be in the minuses. So obviously Chainlink is not going to go into the minuses, so we will exclude that pattern and move on to the next one. What you will notice is we are forming a pretty nasty head and shoulders pattern right now. You've got your left shoulder, base, head, and then coming into the right shoulder up here, we would have a breakdown level about $5.63. So in my opinion, this is probably the next thing to keep our eyes on. If we do extrapolate the price target of this breakdown, you could see this would be carrying us down to about $2 or so, which is interestingly below pretty much all of my macro price targets. So I'm not necessarily saying that I believe we are going to go that low. In fact, I don't actually think that we are going to go that low. Let's just make that very clear. Nonetheless, that would be the breakdown for the head and shoulders pattern. So what I do want to talk about, the most important indicator that we do have is our EMA ribbons on the daily time frame. These are very, very strong, and you can see these have been an absolute godsend. You know, you had a couple of fake outs on here, but this really started becoming a godsend indicator since $29. You had a massive breakdown every time you came up into these. You got rejected. We tried to flip bullish from this. We came back for the back test and failed it, so this was a confirmed fake out. Pair this with this descending trend line, and you can see every single time that we faked out on the daily EMA ribbons, you could have said, okay, let's take it for what it is. If we get above this trend line, then we can get bullish. And what happened? Fake out, trend line, breakdown. Fake out, trend line, breakdown, fake out. Didn't even make it up to the trend line and breakdown. So since then, we haven't been having any fake outs to the upside. We haven't been breaking above the EMA ribbons. We've really just been coming into these EMA ribbons every single time, making lower lows and lower highs. We make the lower highs in the EMA ribbons, and subsequently we trickle back down and we go and make another lower low. And as we've had such a very clear cut lower high on the daily EMA ribbons, I think it's about time that we do start heading to the downside. Looking at the RSI, it looks like the RSI is forming a pretty nasty bear flag as well. It does look like we are running out of momentum for the daily time frame as well. We're starting to trickle down beneath this. You can see our moving average has crossed below the RSI line, and the last couple of times this happened, breakdown, 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 hold it as support, go on a run, breakdown, and now it looks like we're setting up for another breakdown. So I don't cover Chainlink too often. In fact, the last time I did cover this, we were around about $6.94. And I was telling you, just like I did with my Cardano update, I was saying that we were going to come into the EMA ribbons, get rejected, break down, and that's when we would start our next leg to the downside. So as you can see, since our last prediction, the breakdown is only really starting to have its origins now. So I think we are going to be starting to break down very, very soon. In the last video, I talked about my macro price target being down here at around about $2.92. I definitely do think that's on the table still. This is your 2.618 down here if you are wondering where that price target comes from. And if we zoom out, the top of this green box was basically a previous rejection, 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 flip support. That's when the bull run started. So this big green box that we've got here constitutes a lot of data points, a lot of previous support flip resistance, and or a lot of previous resistance flipped support rather when we were entering a bull run. And subsequently, I think this green box is probably the best bet to have on where we are going to come down to next. The start of this is coming down at $5.11, and as you can imagine, this would be my next price target. I think that is too conservative though, because once again, your head and shoulders, which I do not think is going to play out in terms of the price target, but nonetheless, I do think the technicals of this head and shoulder are going to play out. This would be meaning after we break below 567, we could do something like this, touch off the box, come back up, and then break that back down. So I'm actually going to keep this line on the chart because this is what I see panning out in the next couple of weeks, in the next month or so. That being said, that is the daily time frame for Chainlink. If we do hop over to the weekly time frame, you can see we've basically fallen below all of our macro Fibonacci's. The trend was completely invalidated after you capitulated below the 786 fib at $12.64. And as you can see, this is how this is how beautiful TA is. You know, you back test it, you back test it, you back test it, you back test it, you fall below it, massive capitulation. Since then, we've been forming this bear flag, and now, in my opinion, it looks like we're gearing up for that next move back down. There's really no strength in the market. If we do put volume on the screen, you can see that every single time buyers step in, it's like a dramatic increase in volume for a couple of weeks, and then it's followed up by no follow-up, and subsequently we start trickling back down to the downside. So looking at what we've got here, buyers tried to step in the market and they were pushed back down. Sellers were running up into this breakdown, and as you can see, we are starting to get the selling volume coming back into the market. So I think we're very, very close to initiating that next move. If we head over to the lower time frames, not a lot going on, but we have flipped back below the 4-hourly EMAs. The 4-hourly EMAs, when you're trending sideways in a channel, is almost a useless indicator, so I don't want to exaggerate and act like this is the worst thing to happen in the world, but pair this with the fact, with everything else that we've talked about, pair this with the fact that the RSI is making lower lows and lower highs and breaking down every time we come up to our moving average, and also pairing this with the fact that we've got a massive, massive increase in bearish volume stepping in on the market. It's not looking good. So the charts, the technicals, the volume, these all say that we are going to be breaking down. What do our oscillators and moving averages, what are they saying at this moment in time? Well, the squeeze bomb on the daily time frame, let's start off on the weekly actually. So the weekly time frames, it looks like we're about to have a retest of our weekly MACD. It looks like we might even... No, I actually don't think this is going to break bullish, and if it does, it's going to be a very quick fake out, just like we saw back here. The reason for that is because the weekly is already starting to come down, so by the time the weekly MACD starts to change, we're probably going to see this start to massively move back down. The OBV has been relatively impressive. This has been going up during the dip, and subsequently, I think, if we head down to the lower time frames, I imagine this is going to start to have already started to trickle, and... no, it actually hasn't. OBV has been relatively flat. This is the on-balance volume. The daily MACD looks like it's getting ready for a bearish flip to the downside. This is exceptionally brutal because you've got a high up here on the MACD. You've got a lower high, lower high, lower high, and it looks like we're about to solidify another lower high before we break back bearish. So all signs point to a capitulation. Squeeze bomb is kind of just chilling out. It's been relatively stagnant since the breakdown. It is saying that it's starting to head up after we push up with this once we started to complete the top of this right shoulder, but once again we're starting to head down now, so this would only make sense that we are going to initiate a breakdown very, very soon. Lower time frames, MACD is heading down. Squeeze bomb is once again relatively stagnant, trending to the downside, but still Squeeze bomb has been super flat for the past 24 hours or so. It is actually in favor of the bulls right now, but I do imagine this is going to change very, very soon, because if we look at the greater markets, Bitcoin's just set up for a 4-hourly rejection of the EMA ribbons. We've just got massively beaten down to the downside. You can see we basically had a Bart Simpson pattern coming up, you know, your spiky hair, and now it looks like we're having a breakdown. You can also call this a rounding top, rejection of the daily EMA ribbons. There's a lot going on in these charts today, and subsequently there's many reasons why I think we should be heading down. The momentum indicators on Bitcoin are a lot more clear cut. For example, squeeze bomb MACD is already flipped massively bearish and is now plummeting to the downside. This is all happening while the stock market is breaking down and the dollar is heading up. So putting everything in a neat bow, the Chainlink is not looking too good right now. Chainlink in of itself has been trending sideways and lollygagging for the past, well, basically since I covered this last, almost a month ago. And as you can imagine, this is because we've been trending sideways in a channel. But looking at the momentum indicators, looking at what's happening on Bitcoin and the greater markets like the stock market and the dollar, all signs point to a capitulation very soon, in my opinion. This is what I think is going to be playing out. I think we're going to be breaking down. $5.11 is going to get tagged. We're probably going to come back up, confirm this bear flag as previous support flip resistance up at 555. And then head down to the 2.618. So breakdown 513, bounce 550, breakdown 289, and when we do get to these regions, which is about a 55% drop from now, this is where I think it's going to be a better place to accumulate Chainlink for the next cycle. I've been on the sidelines for it for quite a long period in time. I do somewhat like it as a pump coin, although I do believe the fundamentals are slightly outdated as a smart contracts platform. I think this is the problem when you're investing in new technologies in the crypto market. Nothing against Chainlink, but this is how crypto markets work. I mean, hodling onto these technology coins would be like hodling onto AOL and the first internet stocks. There's always going to be improvements on these technologies, so I'm definitely not saying that you should hold Chainlink forever. However, I will say that it does have a strong community, and at some point in time, when we do come down to these levels, which are massively oversold, I think we could be setting up for a massive bounce, and I definitely want to put myself in a position where I can accumulate for, I don't want to say accumulate really, I would be doing this for a short to mid-term trade. This is where I kind of look at picking up some Link, but I will have to reevaluate the market as we come down to these $3 289 levels. I don't want to say, you know, I'm setting a buy order now at 287, because if we enter a confirmed recession, if the stock market massively starts to capitulate, I'm obviously going to want to change my mind when new data comes in. So 287, I could definitely see myself being interested and looking at buy orders for Link, but I would absolutely not 100% put myself in a bucket where I'm saying this is what I'm doing. I will not be malleable to new data. So you've always got to keep yourself open, be malleable when new data comes in. You don't want to keep a hard head and say, this is my opinion, I'm going to stick with it. You want to be able to change your opinion when new data comes in. There's a lot of stuff going on in the markets right now. I will be updating you when I think the bottom is in and when I do plan on buying Link. But right now, I don't think the bottom is in. I do think if you're buying now, you are going to be wrecked in the next couple of months. And once again, this is the next breakdown. From where we are now, 22.5% is the next breakdown. We'll probably have a bounce before continuing and heading down 56% in total before we can even consider, in my opinion, that we would have found our bear market low. That is all I've got for you for today on Chainlink. Hope you enjoyed today's content. Hope you found some value in this video. And as always, cowboy out. Peace.